U.S. hurricanes. It's definitely hurricane season, that's for sure. And hurricane season usually lasts until the end of October. We just witnessed two big hurricanes, Helene and Milton, I believe, hit the United States, devastating a lot of Florida, Central Florida, the Tampa area, just south of the Tampa area, and totally devastating the Carolinas. And I think if you're anywhere in North America, you can't help but to turn on a TV or online to see the devastation. It's quite sad. It's Many people's lives have been turned upside down. It's quite unfortunate and sad. From an investment perspective, what do hurricanes or these catastrophes, these negative events have on the markets? Well, usually they're short-lived, whether it's a war, whether it's an attack, whether it's a hurricane, something to do with weather or anything like that. The effects are usually short-lived. You have the event itself, things can linger for a little bit longer, and then the market seems to pick up and get back on its feet. I know a lot of individual investors have been trying to figure out the impact of the hurricanes in the United States. What types of investments you could possibly buy that maybe can actually do better because of the rebuild, the amount of rebuilding that's going to go on in Florida and the Carolinas. Where should you be looking? And I have a chart on some of the sectors that have been impacted positively and negatively by hurricanes in the past, and we can put that up here. You can see the first one, yes, home improvement companies. I know a lot of individuals looking at buying shares of Home Depot or Lowe's, because where are people going to get the supplies to rebuild their homes, to rebuild parts of their homes, rebuild infrastructure in general? Well, they're going to go to Home Depot. They're going to go to Lowe's. They're going to go to the places where they can get what they need. And so Home Depot, not a coincidence that it is trading at 52-week highs and close to all-time highs right now. But I think you have to also be careful a little bit, because like any large retail business in the United States, Home Depot has a lot of locations that are in Florida, that are in the Carolinas. And a lot of those locations may be not open. They may have been shut down and may be shut down for quite some time. So on one hand, yes, you might see a lot of traffic in these places, but if these locations are shut down, what is that going to mean to the top and bottom line for the company? So on one hand, some positive, perhaps on the other hand, some negative, and how is that going to factor out when they report earnings? Generator companies, obviously self-explanatory. You lose power, you need a generator. Engineering companies, you need engineering companies to help with the rebuild. Battery makers, water solution companies. Obviously, when these hurricanes hit, they affect the quality of the water, and all the water companies are needed to help with that. And last but not least, our insurers. How much are the insurers going to have to ante up to the people to cover a lot of the damage that has been had? You tend to find that insurers, after a situation happens, they tend to make their insurance coverage a lot more narrow, a lot more focused, because they're not really happy to dish out all this kind of money. So overall, as an investor, yes, hurricanes and other negative events can affect the markets, usually short-lived, either a spike or a downturn, and then it's followed by cooler heads, I guess. Cooler heads prevail, and we get back to normal investing. I guess our second chart for this segment is one I find quite interesting. Top 10 costliest U.S. catastrophes, adjusted for 2023 dollars. And you can see here, Hurricane Katrina, $102 billion in damage. 9/11, that's not obviously a storm, but 9/11 terrorist attacks on the U.S., how much that hurt the United States. Hurricane Ian, followed by COVID. You would think COVID would be probably number one, but it's not. You're looking at number 4. Hurricane Ida, and then you have all the hurricanes after it, Sandy and Harvey and Irma and Andrew. I remember Hurricane Andrew. It hit Florida quite hard way back in '92, and back then it was something to see. But look how many large hurricanes have unfortunately come after it. So I guess to sum up, hurricanes definitely and events like that, whether it's a hurricane or another negative event, definitely affect markets. They can affect oil prices. They can affect the general market. They can affect all types of companies. The effects tend to be short-lived, but definitely pronounced. Very sharp turns either to the downside or the upside. But as I said, overall, the good news is cooler heads end up prevailing. And as investors, if you can take advantage of a short-term blip in the markets to the upside, why not? But overall, for most investors, it's something that you probably just want to stay away from.